Now, let's cross over to my colleague Patrick Ryle, who joins me from our Tokyo newsroom to take stock of the lesser-known Japanese stocks that traders are watching. Patrick, Daihatsu, it got upgraded at Merrill, got a new buy at Morgan, but why should we be buying car makers when the economy is in the can?
Well, you're right. I mean, if you look at U.S. sales figures for cars, the market shows no signs of improvement. But Daihatsu, which is it's the largest maker of mini cars here in Japan. It's majority owned by Toyota. And really, they get most of their sales in the domestic market. And Japan has been introducing basically eco sort of friendly legislation that's providing incentives to buy into these cars. So both Morgan and Merrill are saying, they're well positioned to take advantage of these kind of government programs. And also, they've been cutting back on capacity. So, they're not saddled with the same structural problems that the rest of the industry is.
Morgan and Merrill, not the only ones liking Daihatsu. Looking at the Bloomberg, we have 13 out of 14 analysts who say buy or hold Daihatsu shares. Now, turning to environment-related companies, why are they falling hard today? What's the story there?
Well, I think the simplest answer to that is the law of gravity of what goes up must come down. Companies like GS Yuasa, Sanyo, and Kurita Water, which are making sort of environment-themed products, whether it's lithium batteries or water filtration, they've all doubled or tripled in the last couple of months. But what you always find in a correction phase of the market is that the highest PE stocks, the stocks that have had the biggest run-up, tend to be the ones that get sold off the hardest.
And one more before we let you go. Bank of Yokohama up on Nomura upgrade. Regional banks in Japan have been considered somewhat dangerous because they put money into real estate. Why the bullish call?
Right, yeah, a lot of the regional banks, they had too much money and they didn't have any loan demand, so they would pour it into real estate investments. And Bank of Yokohama was no exception to that trend, and that sort of blew up in a lot of their faces. But they've written off a lot of their loans, so Nomura is saying credit costs are going to be coming down, so it's a good time to buy.
Okay, good stuff. Patrick Ryle, thank you so much for that.